Right, hey everybody. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Definitely some position disclosure updates. I fully stopped myself out at STX, got a price target increase. I was trailing it on the daily chart. I did not like how it traded. I had started that too early. Even with the trailing stop and decent management, I lost a good chunk of money on it. I'm out of it. I'm done with it. I got mostly stopped at a WDC as well, but I have a tiny little bit left. Same exact thing. Just got price target increase, broke through where I was trailing it on the daily. Lost money on that as a swing total. I got stopped out of a bunch of SanDisk yesterday, more today. That just broke out on the daily chart. Had been short that one a while. Also started too early on it. I got smoked in that yesterday. Lost a little bit more today. Stopped myself out of most of it. My last stop didn't quite trigger for SanDisk or WDC. I'm very light in those now. I rotated that money. I pounded as hard as I possibly could. QBTS, JOBY, OKLO, QS, and SMR to the short side today. And as aggressive as I thought I was, I almost, in hindsight, feel like hindsight, careful with that. But feel like I felt like I was really aggressive and also felt like I wasn't aggressive enough. Was able to get all out of SMR and QS intraday as I got to my targets. I got out of all the JOBY as I got into my target as well, and then it bounced a little bit into the close, so I got back into some small. And then QBTS, I not only didn't get out of it, I was adding even more on the way down. So really trying to pound some of these pre-rev companies as they're breaking. So it's an interesting day. The STX, WDC, SanDisk with their price target increases and the stop out on those. I took a decent P&L loss on those, but I still had a really solid overall P&L day, even with those losses, because the other names worked out so well. So position disclosure updates there. Um, I thought on a couple of things while I was talking. I didn't have my light speed up, so give me a quick second here. All right. Oh man, what a day. I'm exhausted from today. I also woke up way too early. I woke up at 4:30, checked the futures, which was a mistake, and couldn't fall back to sleep. I'm usually up between 5 and 5:30 these days anyway, but 4:30 is a little bit early. The market took a hit today. SPYs are trading down further after hours. So, including the after hours action, they're down 0.9%. So, it should be a little bit less than that. Though I would say in some ways it felt like more. The Qs are down zero point 0.7. They're also solidly down, I think, from where they closed. Yeah, it's a big move lower. They were down much less than that. So, these are stale quotes I'm giving you guys. I don't know if anybody has the exact quotes on the percentages down that we closed. IWM is now reading 2.35%. So definitely a little bit of a smoke show. The dollar was down, the PLT was up. It seems like a fear trade. The big notable one is this VIX move. VIX above 25, really notable. I'm going to circle back to that in a second. Bitcoin continuing to get obliterated. I mentioned in the morning meeting that I think these crypto charts look terrible. Ethereum's losing support. Solana losing support. These cryptos look terrible. Shob telling me that's changed from the open. One change from yesterday's close, if you can. Um, so yeah, I mean, so it's kind of the quick update there. Uh, Sorry again, one quick second, getting filled on stuff. Some of these names I'm in are fast movers, even after hours, and money doesn't sleep, right? Money doesn't sleep, nor do I. All right, So the market gapped up again today, and it was a little bit tricky off the open. SPY's down 0.68% and Q's down 0.37%. So very little there. Thank you, Michael. So a little bit tricky, right? So we look like we're breaking up to continue a bull run at a certain point this morning. We gapped up. We had a little bit of an opening high here. Then we had an opening low at 1010. And then as you say, I think that those first opening highs and lows when the market is no longer extended become very telling for the future oftentimes. And we broke that high here at 1040, led by the Qs, led by the Qs, with the IWM not participating. So you definitely want to note that the IWM, which has been the leader, was not participating, and it was the Qs that were pushing the spies to break up. But then I sent everyone a 10 off the 1040 candle. I was like, watch the 1040 candle low. If the market were to lose that, it could potentially indicate a failed breakout. And that happened. I think it was really confirmed here with this 11:25 a.m. candle. Um, when like this pivot low broke, that you were getting a little bit of a change in composure with the market. And again, the IWM was staying really weak, but the Qs were strong and but began to lose some of their support as well. Um, IWM was not trading well at all, but this was the VIX. Especially the VIX when the market started to have that little bit of a breakdown. I mean, pretty much for a lot of the morning here, the market was up and the VIX was like flat to up. And like a UVIXY, which I know is priced a little bit differently, was actually trading like really strong at certain points here, just holding up really well, staying green, and then obviously when the market started to break down, this really went. So look at this UVIXY chart actually while I have it up. This daily chart is notable. This thing really, really broke higher. It's significantly above Friday's high where you could just look at the absolute VIX here. Above the VIX, based on the last Charlie McElligott note I read, was that there was the potential of like a positioning squeeze that he referred to as a Vegas squeeze in the VIX above 25. Um, I think that could get you maybe up to $28 really quick. So I'm curious to see if this VIX gaps up tomorrow and the market gaps down, if you could sort of really have an acceleration of some sort of a vol event. The interesting part about this market, though, is that when I'm looking at the VIX, I don't understand how this market's not completely destroyed. We are down, obviously. We had a red day today, but this market is still really far above Friday's low from last week. It's still pretty far above the systematic triggers that we've been looking at, which are primarily, they're spread out, but primarily begin to trigger around Friday's low through 6,500. I think 6,500, a little bit below it, is a really, really important level for for the S&P. So it's incredibly notable that the market is actually holding up as well as it is. It just still, to some degree, seems like there is nonstop forever demand in equities. With all that said, we have OPEX tomorrow, and everyone who's been on this team here for a while knows we've studied this plenty of times in the past. There are so many instances now of the market can't crash in front of OPEX. It needs to get past OPEX. I'm not saying that the market is going to crash necessarily. I'm just saying that we have plenty of previous instances where we're looking at things and we're kind of scratching our head and we're like, oh, why isn't the market lower? And then options X happens, and then sometimes starting on the OPEX day, more often starting the beginning of the next week is when the market actually sells. Whether or not that's going to be the case this time around, I genuinely don't know. But you do get a lot of that positioning roll off with OPEX and a lot of that gamma roll off with OPEX that just opens up the window for larger price movements. February of this year was a perfect example of it. It is not a coincidence at all that the top of the market before our April almost bear market was options X for February. Not a coincidence at all. The exact same thing happened with COVID. Not a coincidence at all. So we will see here. The market is making what I would call a bearish consolidation. I technically wouldn't call it a bear flag. I would call it a bearish consolidation. It's probably just picking apart semantics here. But we are making a bearish consolidation. I keep noting Monday's high and low as like key spots where if we can hold above, not just trade above, not just gap above, but hold above Monday's high, that could mean that this market is recovering and starts to go after SPY 670 and then again all-time highs. If the market can hold above Monday's low, which is that inside day, then you're probably going to get a deterioration back towards Friday's low. And again, that's where the systematic triggers are. So I think if you breach Friday's low and you can get through that Friday's low through 6,500, that we're actually going a lot lower. I think that 6,300 is in the cards, but we have to actually trigger it. And today is notable with the VIX move and the market selling down and the market kind of closing a little bit on the weaker side, but it's still kind of somewhat within that range from Monday, especially with the closing price. I think the after hours price is bringing it down a little bit more. Um, but again, with the VIX move, I'm curious to see, is there any chance we can actually have a gap down tomorrow and a gap up in the VIX? I think if you get a gap up in the VIX, you have that VIX mega squeeze probability that Charlie McGilligan was talking about. And I just don't see if the VIX gaps up tomorrow and the market has a little bit of a gap down tomorrow and the VIX accelerates to 28. If that were to happen, this is an if then statement. I don't see how this market doesn't get crushed. But again, let's see. Sometimes you get wacky play. But overall, you can't look at the spies here and say that they look good, but they are yet to break, and it's incredible given I think what the VIX is actually doing. Qs are pretty much telling us the exact same story. The story with the IWM is most interesting. A lot of volatility here, obviously. This is the one index that was able to get above last Friday's high. It made a new all-time high, gave us a doji day yesterday, and then it was most weak today. And off of that weakness, it's almost back down into Monday's range, believe it or not. And I think that that's off the backs of the breaking, finally, of a lot of these pre-revenue companies that we've really started to focus on as a team, I think, this week. A lot of them finally broke. In the afternoon meeting yesterday, I spent some time talking about the potential meaning behind RGTI's daily candle from yesterday, how that selling that you saw, even though it did get bought back up into the afternoon, shows you that sellers are becoming present in this thing, and sometimes that's the beginning of a break. I got a lot of conviction to short quantum today when I saw that they were gapping down when the market was gapping up. So, given the analysis that we did yesterday on it, plus the relative weakness pre-market, the fact that they were gapping down, it gave me a lot of conviction to really try to pound these names to the short side, and honestly, a lot of the other pre-revenue stocks to the short side. And now we'll see what they can do. And not just that, but also be extra greedy on the reward side of it. Uh, Yesterday, I had some larger bids on my short, a bit above the ADMA on the daily, and I didn't get ticked on those by a little bit. And then this RGTI rallied, all the way back up. Today, the last thing I said when I got off the radio was like, guys, if you worked hard enough to get some of these names short because it wasn't easy, they're starting to break. GTI just lost us 50. Make sure you get paid, right? This is the other half of the business. The main focus that traders should have is risk management. That is without a doubt the key to success in the business. Risk management is number one. But the other side of that, which is really important as well, is reward maximization. You put all the work in to try to be able to capture the break of this like RGTI parabolic move when it actually breaks. You got to make sure you get paid for it. So that's why when I saw how it was trading today compared to how it was trading yesterday, I told everyone, I was like, I had these extra bids in front of the ADMA on the daily chart to reduce size in RGTI. I'm getting rid of them. I'm looking for more. I'm going to be more greedy than I was thinking yesterday on the game plan for how I'm taking this trade. and it worked out really well. RGTI is my second best name of the day. It's a pretty solid P&L, and I'm still looking for further follow through. Again, I'm honestly still wondering if I'm not being aggressive enough. Um, I think that this thing sees like that 4250 again at least on it. So that's kind of what I'm looking for. And I honestly think, I would echo, even though it seemed like a somewhat obvious statement, what Marko Kolanovic said yesterday, which is that like I wish I had the exact quote. He basically said, "I've never seen anything like this." I think he mentioned RGTI and one other name specifically, and said that there was a whole bunch others, and said that most of these are going to drift towards zero over time, but telling you the timing on that is going to be impossible. And that's not necessarily a knock on like quantum computing. Quantum computing could easily be the future. It's just when you're so early stage with these companies, that's exactly what happens. A lot of them end up going towards zero, or even if the industry becomes successful, who knows how much money these companies will actually be able to make off of what they're doing compared to what Google is able to do with their quantum computing. I don't know. Um, but I really like the idea now that these things are breaking of actually continuing to press the short side, and that's also what I ended up doing. So RGTI was already short, and then was adding on that short. QBTS I started shorting pre-market with the exact same thought process as RGTI, but then there was other names that were similar but different on these pre-revenue companies that I actually just started really shorting them on the way down, which in some regards is a lot easier than shorting them on the way up, right? When they're already breaking and you're shorting them on the way down and you're shorting them through support levels, that works better. So so you're shorting OKLO on the way down, and I'm still in this. It's another one where I'm game planned for just to move to like 150 right now, and I'm not sure if I'm being aggressive enough on that. And SMR, I'm only gonna have. Um, may not have been aggressive enough on that. And I jumped in this JOBY on the short side, which is with a target of 16. And then I got to 16, I got out of it, and I was like, I may not have been aggressive enough on this. This is probably going to see 14 again or see 12 again. QX was another one. Sort of QS on the way down. I didn't show highs on this. I showed like 17 quarter on the way down. Like not the best price in the world. Um, and my target on it was just the 80 on the daily, just 16. And I'm like, this is going to break this uptrend. And people are literally buying this thing thinking it's a quantum computing stock because it says quantum in the name, and it's not a quantum computing stock. But just trying to push these further on the way down, and it really paid today. And in some ways, it was like, in some ways, not in all ways, but in some ways, actually shorting these on the way down is easy money compared to how we've just been watching these every single day. Just trade higher, and we're wondering how extended is it going to get before it actually tops. The signal I think was really there to begin with when you looked at RGTI's candle yesterday combined with the gap down this morning. And then that quad U finally rolled for me as well. And this is actually the one that I'm heaviest in of all those types of stocks and have the most aggressive game plan on. So we will see how these continue to play out here, I guess, over the course of the next handful of trading sessions, and just what degree of a top that is. Is it just a pivot high, or is it something more that is more lasting? I'm inclined to think it's going to be more lasting, but we'll see. So kind of covers the indexes. It covers those names. You're still thinking like a Nvidia to break today. Was just strong on an Australia headline, on an OpenAI headline. You had Micron actually breaking out. We talked about Micron as a long this morning in the morning meeting. You kind of had to pay up for it, like a decent amount. So some of these AI related semiconductor stocks overall are still holding in. But I'm looking to see if we can get some weakness in there. I'm still looking to see if this Nvidia can actually break that 180. This SMCI I don't think is looking as good now, especially if we can break kind of recent lows. And some people would argue this is like the worst company in the space. So continuing to watch that one. I'm still continuing to watch like in this XME short, which we said this morning that you could short versus yesterday's high if you didn't already have some from yesterday. So I'm not sure if anybody snuck in on that. I prefer shorting these more mining type names than actually shorting the metals themselves. I think that goes back to two things. One, Pat was just quoting Brant Hirsch into the close with some sage advice that commodities are not stocks, and that they trade a little bit differently. And Brant certainly has got a lot of experience trading commodities back in the NYMEX pits. I'll let him tell his own stories though. Um, uh, and I also read a research report that was making an argument that the metals themselves are not in bubbles, but the stocks themselves. The article I read, and I don't even remember where I read it from. I've been reading so much research, I can't even quote it. But it made the case that gold, silver, um, Bitcoin. I said Bitcoin, are not in bubbles, but all the miners, whether it's the pick and shovel miners from the GDX world or whether it's like the Bitcoin miners, are all bubbles. That was the argument of one of the research reports that I read, and I don't necessarily know if I agree with it or not. To be totally honest, I've never been an expert at commodities. I've never been an expert, honestly, on crypto. But I know that I actually prefer to trade these minor names than I do the metal itself, like whether it's an XME or a GDX. And I know that from the research, the limited research I've done on like the crypto mining companies, I know like Mara and Riot are just absolute garbage companies. Just absolute and utter garbage companies. And then you have like a BITF that had a convertible note offering this morning that's kind of ending the parabolic move on that. So if I was going to be short anything, that's what I would want to short. If you look at like MSTR, MSTR, I think I'm even talking with this MSTR anymore. But this thing looks like it's going to go klabooey. Um, so we'll see. We'll see if we get a continued unwinding of some of the speculative froth that's out there in conjunction with the trigger of any of our systematic points. Um, I don't know. I don't know if today is the beginning or not, but I do know that like the degree of, I don't even know what the word is that I'm looking for, but like when I'm reading like Wall Street Bet stuff, like the things that some of these people are saying on there, this is just a repeat. I, maybe I've been trading too long and time goes too fast, but I feel like the beginning of 2021, to me that feels like yesterday for anybody that traded that insane meme bubble that we were all communicating on our team here was a bubble, and that stuff all imploded as we thought it was going to implode, and there was a lot of money to be made when that stuff imploded. I'm seeing the exact same stuff from these people as I was seeing back then, as if they weren't even alive in 2021. Whereas to me, it just feels like yesterday. So again, maybe I'm getting old, but it's like the chat. I keep writing it into the chat as like a half joke. Uh, I learned on Wall Street Bets that you just buy stock, and if the stock goes down, don't worry, it's gonna go back up. So just buy more, and that's it. And I think that there is a degree of truth to that if you're talking about the stock market, like the S&P 500. Obviously, in a long enough period of time, you get all-time highs again. Though I don't think that many traders, though I know that there are some here in this VTF, I don't think that a lot of modern traders have traded through the periods of time when you go through like a 10-year market slump where that market does not make all-time highs, or let alone look at Japan, right? So it doesn't necessarily have to be that way, but I kind of get it when you're talking about the S&P 500, because the studies all show that for regular people out there who are not traders, the best way to accumulate wealth is to dollar cost average into the market over time. And that's, when I speak to like a buddy or something like that, I try not to give anybody market advice outside of our community here in the VTF, but if a buddy is or a family member or something like that is really asking me like, what do I do with my money from my job? I say, well, dollar cost average, and I explain what that is into the stock market or into a few companies that you really believe in, whose products that you use, like Apple or whatever. And it can be a great way to, accumulate wealth for yourself over time. And I always recommend to people that they don't become traders unless they're really going to go all in on it, because it's the part timers that they just end up losing money for sure. Um, so I get that there's some degree of truth to like if you're on zero leverage and only on cash and you're 30 years old with a 35-year time horizon, that yeah, when the S&P goes down, it's an opportunity to be able to get more at a better price. But a lot of companies go bankrupt. A lot of stocks, a lot of individual stocks, a lot of growth stocks over time, they go to zero and they go bankrupt. The S&P, part of the benefit of the S&P is that it actually picks stocks, right, for you. If a stock gets too bad and it can't make their protocols or whatever to actually be in the S&P 500 anymore, they kick it out and they put a different one in. So you're never going to get like an S&P that goes zero unless you have like a nuclear war or the end of the economy and the end of the monetary system as we know it. But individual stocks go to zero. So these people on Wall Street bets who just act like you can't lose money if you buy RGTI, or even better, because this is one that I've done all the research on. You can't lose money if you buy Quad U that did $78 million in revenue in 2024 and has a $6 billion market cap. You can lose it all. You can lose everything that you put into this. You absolutely, absolutely can. So I kind of just feel like I'm seeing this full repeat of early 2021 with people talking exactly how they were talking then, and then I remember in 2022 fielding phone calls from people who were like, "Hey, Derek, I learned about T3, and these are the smart ones, right? I learned about T3, and I'm interested in like really learning markets and really learning how to trade. And my experiences, I started trading during COVID, and I was just buying call options, and I didn't even know what I was doing, and I made $500,000 over the course of 2021, and then in 2022 into the bear market." I lost all $500,000, but I spoke to so many people who didn't also understand that like tax consequences. Like they made all the money in one calendar year and then lost all the money in the beginning of the next calendar year and then had to pay taxes on the money that they had made in the first calendar year. And I made 500,000 and I lost 500,000. It was a learning experience for me. I want to learn how to do it right now. So I'm interested in what T3 is doing. But those people, a lot, they all had a comeuppance because they didn't know how to manage risk. They're YOLOing into calls and not even knowing what calls were. We just saw in the Scott Rubin note that Friday of last week was the largest call buying option day in the history of the stock market. And it's almost all coming from retail. If you haven't read the latest Rubner note from Citadel, it's free on their website. Get your hands on it, read it. Look at the retail flow. It's been the only thing that's been holding the stock market up, in my opinion, the last month and a half, when I read that Rubner note, it is retail, and to some degree, some institutional chasing started to come in actually last week. So a little bit of institutional chasing because it's the dumb money, and all just this never-ending bid from retail, and you just see like the smart money hedging and hedging and hedging, not necessarily dumping their longs because fear of underperforming, right? Fear of underperforming on the calendar year if they get out of their longs and the market doesn't go down, but they've really been laying into hedges over the course of the last week or two. So I don't know. Anyway, I'm just kind of ranting and rambling at this point on some of the stuff that I've been seeing. We'll see what the market does tomorrow as we go into OPEX. You guys know the key levels on the downside. Let's see if there's any chance of a VIX gap up, market gap down. That could accelerate upon itself, especially if we get through Friday's low. Or maybe we just get another weird, choppy trading session because it's OPEX and things could maybe get interesting early next week. I don't like the idea of really being long this market when you still have so much, systematic long exposure. I know it unwound a little bit from the vol side, but not at all from the trend following CTA side. I want to be bullish as we go into November, but I would love to see if we could get like a real sell down here that can unwind a lot of that systematic exposure right as we go into the seasonal bullish period of November when the buybacks come back on and everything else. That's when I want to start like layering back into longs, especially any longs that are companies that have those large buybacks. But we'll take it one step at a time. We do still have, I think, like a strong window of kind of weakness here between uh, I'm trying to find the calendar, whatever, between now and the Monday or Tuesday that's like the last week of October into the beginning of November. And we'll see what earnings season looks like as well, because the other interesting one obviously was this TSM. And that was the first thing I said in the morning meeting was we have to watch TSM. TSM is breaking out here on a gap up on a I think it was a phenomenal earnings report. I thought it was a good earnings report, but let's watch TSM. They sold this TSM down. You- I just between TSM and the VIX, I still don't understand how we weren't lower today. TSM going green to red on that earnings report, I think, should have brought down the other semiconductors significantly more than it did. The other semis held up great, actually. And between them selling the news name down on the earnings report and the VIX spiking above 25, it's incredibly to me that the market held in as well as it did. But anyway, I'll leave it at that. I'm talking about GLP drugs. Uh, from Rock here. What do you make of this VIX move? And yet we are not down much today. You may have answered it, but I missed it. It's such an anomaly to me, Rock. I I feel like I've been consistently. I feel like I'm trading, and this is one of the beauties about trading. I've been doing this for a decently long period of time now. 16 years or whatever professionally. I've never seen an environment like the one that we're in. It's so weird to me, this never ending bid in the index, never ending bid in the index with this VIX move. I've never seen anything like that either. And TSM went green to red. Don't understand. I really don't understand how we're not down more. The tinfoil hat theory is it's because of OPEX tomorrow. They're still holding this market up in front of this OPEX. The fearful side of me, because I'm very short, is the VIX comes down because the market doesn't go down. The VIX comes down, and that actually would force, I think, a huge squeeze higher in the indexes at a certain point. I'm obviously still leaning towards the bear side of the thought process, but I have to always be willing to make the counter arguments as well and keep myself honest. What happens if this VIX comes crashing back down and the market never gets past last Friday's low? Then you're probably going right back to all-time highs with the never-ending bid of this market. But the other thing that I would note, we know that the big buyer has been retail, and there's that other research report that was from Morgan Stanley that we're reading. And I take this with a huge grain of salt because I don't think that this can be super measurable. But they say that the retail buying waves on average last 6 weeks. There's examples of it going more, but on average, you get these big buy waves from retail that last for 6 weeks. The week that we're in right now is week 7. So, are they running out of ammo at a certain point? I mean, we finally did lose the RGTIs of the world a little bit today. So I don't know. I don't know. Jim Cramer says, I think the CEOs of the speculative stocks are going to start selling. Same with the executives. It isn't lost on them what happened today. They should have been selling already, and they should be doing any secondary offering they possibly can. I mean, that would just be called good management. All right, let me pop over to the YouTube, see what's going on from Policing Pips. Feels like many of these moves now are more clean on the sells than in the recent past. I agree with you. I think it's because you have a higher VIX, but yet you still aren't getting the follow through. Market environment seems to be changing. for sure. Also agree. What names appear to be leading uh leading these heavier moves? That's the great question, right? Just typing up this FNGU. A lot of the Mag 7 stocks just have consistently not been looking good to me for a while, honestly. So those are the ones that I would continue to watch. I don't think Nvidia looks good, but it can't lose the 180 support. I don't think that Meta looks good. 700's a level to watch. I don't think that Amazon looks good. It's holding below recent support. Um, Microsoft is very neutral, but if it starts losing 5, 10, it could have a problem. Apple has not recovered well this week compared to the indexes. I think that's notable. Tesla, if it could lose 420, it'll have a big problem. 440 and 420 are the really big levels. So I think that if you're going to get a crack, actual like a real actual crack on this market, that you can be looking at these Mag 7 stocks for continuation. Tesla through 420, Meta through 700, Amazon you could already be short. You could short versus today's high. Google is like the best looking one, and that put in a shooting star today. Apple potentially through 245. So be watching some of those, and I'd be careful still on like the AMDs. This AMD might end up failing with the market if the market fails, but it's just an unstoppable force. Sorry, 1 second. For Mr. Trees, do you feel lucky that you weren't short AMD before the big up move as you were short some of the other weaker tech mega caps at the time? That move scared the you know what out of me, and I had no position. I finally went short RGTI today for the first time, and it was I can't bar. It was a unborrowable. We had easy borrows on that here at T3. Not easy, but super 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 cheap. No, easy, easy. It's free to borrow. You didn't even have to pay for it. QBTS was hard to borrow, but super cheap. Uh, do I feel? I mean, I don't know. I don't really think about luck with trading very much. I've had plenty of instances where I've had stocks gap against me. I mean, I could say the opposite. I could say I'm unlucky. The market started to crack today, and three stocks that I'm in got price target increases. And I got stopped out of three names today that I've had shorts on because they got price target increases and went past my stop losses, and I took nice losses on them. And it happened. It's happening right in front of the market, looking like it could crack to me. That sucks. Which is why I very, very quickly rotated that buying power into other stocks, or at least a lot of that buying power into other stocks. But you know, you can't. I just don't think it's the right way to think. You get stocks that gap in your favor. You get stocks that gap against you. You get stocks that have big moves when you're in them. Stocks that have big moves when you're not in them. It's the randomness of trading that I don't want to focus on. I want to focus on the things that I can control, which are my rules and my game plans and being consistent with what I do. Yeah, gold's getting a little bit crazy from Rock. From Jackie, have you seen a situation like today where the VIX is up so much and the market is not? No, I never have, and Rock here has been trading longer than I have, and he never has either. I think he has. I think you have. Pretty sure you have. I know you definitely got a few years on me. 2000. Yeah, yeah, for sure, for sure. Uh, so you did trade through a lost decade then, that whole 2000 period that people act like isn't a thing. I actually think there's a decent chance that we get another lost decade. That's why I trade counter trends. Yeah, I get it. I get it. I think so much of the environment that we were like brought up in shapes the way we kind of view markets forever. Yeah. Oh yeah, and I forgot to mention because I'm seeing somebody in the in the YouTube say it. The regionals. I didn't even mention the regionals. Look at the KRA today. How did the market not go down like 5% today? between the VIX, TSM, and KRE. I mean, some of these banks look like they're imploding, and Jeffries, the government might start bailing out community banks or saving them or something. Was coming out today. I mean, wow! Look at Zion. Again, granted, we just went through a banking crisis just a couple years ago with SVB, and it did not didn't destroy the stock market. We did have a little bit of a down move from it though, for at least a day or two, if not a week or two. I don't exactly remember. Yeah, I don't understand how this market held up as well as it did today, to be totally honest. So maybe OpEx, or maybe, the flip side of this, because I've also seen this happen and I can't not have this in the back of my head, is that there's been so many times where I've seen the market should go lower but can't because of something related to positioning. Maybe that's what's going on right now. Market can't go lower because of OpEx tomorrow. And then whatever the issue is that should have brought the market lower was actually resolved by the time you hit the point where the market could go lower. That's what happened in June with the Israel-Iran stuff. I really thought I didn't think that should have given us a 10% pullback or anything, but more weakness than we actually had. And once we hit June OPEX, they resolved it. And the market just never went down. We never went down on Iran Israel, but we went up on Iran Israel when it was over. And it's not impossible to get a similar situation here. Market wants to go down right now for all these reasons, not to mention the federal government's still closed. Can't because of OPEX. And then next thing you know, I don't know, I'm going to make up some stuff here. The government gets a deal done this weekend and other good things happen, and then the VIX comes crashing down and the market's making all-time highs. It's not impossible. I'm just leaning still towards bear side continuation here, and a triggering of some of the systematic selling is what I'm still really looking for. But we got to be cognizant that two ways are still possible with this market. Cool. All right, I'm gonna wrap it up there. I'm beat from today. Tomorrow's Friday. Have a great night, everybody. See you then.